Greetings, traders. I hope you are all doing well. Welcome to our channel. Yeah, if you're new to the channel, make sure that you subscribe. If you're a returning subscriber, thank you so much for your support. Yeah, so today, like I promised in the groups, that we're going to be looking at territories, market territories. So, what market territories are simply, we're just going to look at the importance of knowing what your higher time frame is doing. Because I've seen most of the people, let's say they like analyzing from maybe let's say from a lower time frame, or maybe just stick to one time frame without actually noticing what's happening on a bigger time frame, which is next to your smaller time frame or more. So firstly, we're gonna look at this. Let's give an example here. This is volatility 75. This is volatility 75. Yeah, so we can clearly see here that price was in an uptrend. Price was in an uptrend, and here it created sort of like a demand where there was friction. And here, let's assume that all this didn't happen in the first place. So clearly see that we're in an uptrend. Price forms a demand here, price forms a demand here. There's sort of like traffic in these areas. Then what happens next is you see price coming down like this. We all know that price is still in an uptrend because there's this area that has to be broken, or that. So I'll show you this same chart on a smaller time frame. See what was happening there, where a lot of people would have been caught in this area here. This is our H4 time frame. So you can see we've drawn this area here as our demand area because you can see that price sort of like had stopped, then there are more orders that came through here. So in this area, this is our buyer's territory. This area, this is our buyer's territory. You can see what happened. Price came and bounced from this area and went up to this area. We label this area supply because you can clearly see how price dropped from this area, showing that there was sort of like some rejection in this area. So we have to be careful when buying around these areas, let's say, especially here. So we go to the lower time frame. Let's give an example. Let's say if you just stuck to M15, could have entered. I'm not discouraging people to sell in such kind of situation, but I'm just trying to create that awareness that those who like selling from one specific time frame must be aware of their territories. So as you can see here, price was in an uptrend. Then this one here, it was our last higher low. You see, price came here, failed to create a new price, failed to create a new high. Like we said, that if there isn't any new high, meaning there might be a problem somewhere. You see, this was the last high. Price started creating lower highs at this point. Then finally it broke this last higher low. See what happened? Yeah, so this is the importance of knowing also market structure. See, after price broke this area and the trend line, we dropped. But you can sell in this area, you can sell in this situation, but like I said, you need to be aware of what's happening on your bigger time frame. In this case, it's our H4. You see, here we're in a downtrend, but if you look at up here, we're still in an uptrend, and this could be potentially a retracement. So meaning even if we're selling in this area, we're very much aware that anytime price can shoot up, because here on top here, the reason why we're saying that we're still in the buyer's territory is because there hasn't been any structure breach. No structure has been breached in this time frame. Well, structure is still intact. So You can see here, price broke through this point. Could have sold, but knowing very well that price can shoot anytime. It can shoot from this area of demand here, or it can actually hold on these areas here, because you can see that there was sort of traffic in these areas. So very important. Then, as you can see here, as price was approaching towards our area of demand on H4, the same chart for VIX 75, you can see price was in a descending channel. You can see price was in a descending channel. It was a fake out here. A lot of people are trapped here, obviously. Then you see how price moves in these channels that we highlighted in the previous videos. Moving in channels, could have been selling, but as you can see, there wasn't that neat price action because there was a lot of choppiness. I know a lot of people would have come out from, let's say, if you entered from this point here, you would have exited maybe somewhere around these areas, because look at how price was choppy in these areas. But you can clearly see that price was in a descending channel as it was approaching our area of demand H4, because we've already established that this price is in a buyer's territory. So you can't sell, like continue holding the sell, because we know that we're in the buyer's territory. And look at what happened. Price broke the channel. Break of the channel and market structure. You can see that there was a break of the channel, and this one looked like more like our clean last lower high here. You see, broke there, meaning there was a sort of like a change of market trend. You see, then what happened next? Price came to retest. If you extend this trend line, you can see that it came to retest the trend line, which is part of the channel. And you can see here, there's also an area of demand that was created. So as you can see, the reason why we are confident on buying is because from the hard time frame perspective, we're still in the buyer's territory. Like I said, we're still in the buyer's territory because there isn't structure that has been breached from the hard time frame. The structure is still intact. You can clearly see also here that the price started creating sequences of higher lows here. See, if you draw a trend line from this point here, you can see here it created a new low here, low that isn't lower than this. So change of market structure. You can see that now price went up. So there is also this other example of volatility 50. This is H4 as well. Yeah, you can clearly see here. The reason why I've established that this is a seller's territory, you can see that price is creating lower highs and lower lows. Lower highs, lower lows. Yeah, so we've established, first things first, that price is in a downtrend from our bigger time frame. So the next thing is, I now label these areas. I've labeled these areas. You can see here that price held this area, like it held on this area. Then you see here there's an area of demand here, which has created down, not that good. Yeah, see, but it held. Then here, like I said, that price is creating series of lower highs, lower lows, just like that. Yeah, so these are important points. So here, the reason why we have seen this is you can see how price broke this area here. Notice how H4 demands are removed, are being violated. They're just being violated. Price is just passing through these areas of demand. So it showed us that sellers were in control of this market because demands were not holding in this case. And in this case, you can clearly see how supply areas were holding. So we know that there are more sellers in this market. Yeah, so if you go from in a smaller time frame, this is M30, same chart. You can see what was happening here. You can see what was happening here. See, there was even a change of market structure in the lower time frame. You see, there was a proper change. There was a gradual change. You can see here nicely. Price started making lower. Price started making lower highs. What else? Lower lows. Yeah, started making all those things. You can see here how price was making these highs and these lows here down here. You can see how price was moving, showing that there was a change of structure. Yeah, so very, very important, because we've seen from the higher time frame that structure was changing because price was violating the levels of demand in that time frame. Then you see what happens. Price started moving in an uptrend in this thing, in this time frame. So you can buy, but you must keep in mind on how price on H4 has been violating or breaking the demand zones. So you can buy. So this is the very most important thing. When you are trading, make sure that you see what the next time frame or the other time frame, the bigger time frame is doing. Because you can see here, if you just came here in this point here, let's give an example, just came on the chart, you're on M30. You come here, you see that price is moving up. You would want to buy and hold, thinking that it's just going to continue, but you haven't yet established that in the higher time frame, it could be just a retracement. That's it, because you have to establish whether you're in a buyer's territory or in a seller's territory. But in this case, we've already seen that how price has been breaking the levels of demand on the bigger time frame. So it tells us that sellers are in control because the bigger time frame has got more, carries more weight than the lower time frame. So you can see here, you could have bought, but being cautious and making sure that you've marked potential levels that price can hold back from. You can see here, if you bought here and held, let's say you've gone out somewhere, you didn't put your take profit thinking that price is gonna just go up and do whatever, then the next thing you find that you have entered. And the bad part with not really the bad part, it isn't really a bad part, but the indices, they really retrace a lot, because sometimes you might find that you have entered here, then the next thing you come check, maybe in the evening you find that price is here, but you have seen that price had moved all the way. It's because of these same small things that you miss out. Make sure that you have established the territories. So here we have established that we're in the seller's market. And you see what happened? Price broke this trend line and kept on holding at this area here. You see, this is the same chart. This is M30 and this is M15. Look at what happened. It was a nice uptrend here. People would have been buying in these areas, buy there, blindly without knowing what's happening on the next time frame. You see? So how to know it's a fake out? Always check the candle for the hard time frame. You see? Look at how price had been manipulated in these areas. Just look at. So a lot of people would fall for such, thinking that it's a breakout. Let's give an example. Say this looks like a nice breakout. Candles closed above this area, and you can see here. So sometimes you have to be patient enough to wait to see what's going to happen. Or if, let's say, I've seen that this smaller time frame has breaked this zone, go to the hard time frame. You see how the candle, wait for the candle to finish up in the hard time frame. That's when you can establish whether it has broken out fully or not. Because let's give an example. Say here, I've seen this price broke out, and if you're a breakout trader, you'd have put, let's say, your buy stop in this area, or you'd have entered thinking that when it's coming down like this, it was a retest. Yeah, but right, you'd have entered maybe at this point here, you're gonna be stopped out, again, stopped out. But look at it, came here, it came back again, then went to the downside. So if you see, you've seen what happened. This is the same chart, this is M15, and this is 2 hours chart. Look at how the same candle is on the 2 hours. Look at how it is. Look at what happened. So you have to be very, very careful. Look at how this candle closed with a nice rejection, and you see there was an engulfing pattern which came through here. So this is another chart. This is volatility 10. This is 2 hours chart. You can see here. First thing is we have determined that this is our bigger time frame, and this is our overall direction, which is in a downtrend. And see that price is making lower highs, lower lows, lower highs, lower lows. So let's give an example. You are here. Here. This is our what? This is our lower high. This is our lower low. Price is somewhere here. First thing is, if you don't know about market structure, refer to the video that was shot some days ago on this same channel. You can check it out. Yeah, you understand the importance of this, the lower high and lower low. You can see price is in between these areas. From here, you can clearly state that this is the seller's territory because structure hasn't been broken. This area here hasn't been broken, and this is our lower low. So we're anticipating that price can continue to the downside, but if it breaks this area, we have to start looking for buys. So if you see what happens, if you go to the smaller time frame, this same thing here. Let's give an example. This is M15. You can clearly see here, if you just came on M15, would have seen a nice uptrend here, thinking that price is going to continue shooting to the upside. But you can still buy this. You can still buy this price, but just have to keep in mind that you're still in the seller's market because price is making lower lows and lower highs in the bigger picture. So you can see this is an uptrend. There's an uptrend in this time frame. Then you see nicely, this is a nice ascending channel. This is a nice ascending channel. Then what happened next? See what happened. There was a break of this channel. The break of this channel. And here, there's a level of supply which was created here before price broke to the downside. See? Break could have entered. If you extend this here, you can see that it came to retest this trend line plus this supply could have entered. So this sell, you could have been confident to enter this sell because you know or we've already analyzed on a bigger picture that we're in the seller's territory. So you can see here after the break of this, you can put this, the supply here. Then you can see how price was also going towards the supply or retesting this trend line. It was moving in a bear flag. Bear flags, bull flags, these are continuation patterns. So let's say here price has already moved from here to there. So this is our first move. This is our first impulsive phase. Then you can see here a correction, then impulse, like that. So it was a continuation pattern. So if you wanted to enter aggressively, you could have entered at this point here, or even here when this low was broken here. When this low was broken, you could have entered there or there on this retest here. You would have entered, or if you're consecutive enough, you would have entered after the break of this, then this retesting this supply level, you have entered here. So the very most important thing again is you need to be observing what price is doing on these levels. The candlesticks are very important. There are a lot of rejections in these areas, engulfing patterns. You need to be observing this area. You see rejections here. You see there was an evening star. You see all these. There was an inside bar there. Very important. So another important tip is sometimes what looks like manipulation or fake out is just price heading to a zone on a high time frame, which is closer to your area of interest, the area that you have marked there. So make sure you have marked all areas that can potentially hold price from declining or rallying. Having said that, don't make your charts look messy. That's the fact. Don't put lines on everything that you think that can hold what, but just make sure that you, with time and practicing, can clearly see and know where price can hold. So these are some of the examples. You see, let's give an example. This is price moving up, up, up. Then you have drawn your area here. This is your time frame, but you didn't look at what's happening on the bigger picture. You draw, then you think that price is going to hold here. Then what happens next? Price just goes up, like it has manipulated you or something. Then it comes back into this range. It's because sometimes you didn't look at what's happening on the bigger picture. You see, it came to this higher zone, then it came into your range. This is an example of sales. You can see here, this is an example of buys. You can see what was happening here. Same concept. So make sure you see what's happening ahead. Let's see if I can see some examples on these charts here. Let's give an example on some of these charts. I think I saw one. Yeah, this one here. You've seen how this fake out looked like. This same fake out that we looked at from the smaller time frame. If you draw this line here, this is our area of supply here. You see what was happening? Price came to that level of supply, then went like that. So there's some people who would have been, maybe let's say, selling from this area here, because it's a, let's say, a break and retest, something like that, but haven't looked up here. Can even draw, I think, this one as well. Can also draw this one as well. This one was a nice drop, best drop. Yeah, this area here. Yeah, you can clearly see what happened. Price almost came to this area, almost came to touch this zone. There was also a zone here. Then what happened? Price came down. So these are some of the very important things that you need to know, guys. Make sure that you know your territory before trading. Can't just be entering trades blindly. So especially those people who ask me questions like, how can which time frames are best to do this? No, those types of questions I don't answer. Because everything, what happens is, guys, one thing that I want to tell you is, in this industry, there's no one who is going to tell you how to do things A, B, C, D. All these things that we're giving you out, these are more like guides. It's up to you to take certain action to know exactly what best suits you. Because the thing is, most people want to have rules. That's the problem. Rules, it's good to have rules, but like having those rules whereby if I do this, automatically this will happen. You have to be very much adaptive in the markets. Okay, you need to be adaptive, and you need to read more and research more to be up to date what's happening in the market, other than you being rigid on certain rules. I don't know, if this happens, they're gonna lose a lot of money. You have to be very fast to adapt to change, because sometimes Forex really requires some common sense. It's not always that you have to follow blind like a sheep. Now, you need to apply common sense to some extent when doing certain things. Yeah, so these are more like guides, whereby you have been taught, you have seen this, then you try to apply on on the charts what you see. Yeah, so you just have to be up to date with what's happening in the markets and other things. You can't just be blindly following this, like certain things whereby you do this, you become rigid, and no, this point it has to do this, it has to do this, according to this, it has to do this. No, these are guides. These are more like guidelines for you to be seeing what's happening in the markets, not taking them like this has to happen. If this, you have to be, let's say, you have to be sharp. Yeah. So when you enter in the money, the objective is to make at least good trades. So these are guidelines to make you guys open up your minds and eyes when you're looking on the chart. So I hope you have enjoyed today's video. Let me know in the comments below if there's something that you didn't understand, and make sure you guys take care. Stay safe.